Hello, Cherif Medawar here, and I want to share with you the four most important factors when it comes to the world of investing. I'm in real estate, so I always focus on assets that are going to actually be what's called productive assets. That means they produce income. But number one thing I look for is safety. So when I'm buying a property, I'm looking, is my money going to be safe in this property? If I buy it all cash, will I be happy my money sitting there because that asset has a good location, good traffic, or good desire for the banks to loan against it, or desirability from tenants to come and occupy it, whether they're residential renters or commercial renters. I lean toward commercial because once I sign a lease with a tenant, I have income for long term with a lot less hassle. So I look for safety. Number two, I look for the cash flow. How much is it going to produce? Some assets today produce as little as 2.5%, which is called the cap rate, capitalization rate, like in California or Manhattan or Miami even, 3%. I saw 7-Eleven just sold with this tenant. 7-Eleven came in and is going to lease a space, and the property is selling at 4% cap. That means on $40,000 income, people will be paying $1 million. Well, the property is producing $120,000, so it's for sale at slightly over $3 million. Well, I look for returns 6% to 8%. This is wonderful because the interest rate is so low, and the formula, if you want to know, between your debt that you're going to get to the income the property produces should be at least 2.5% difference. So for example, if the debt is 4%, you want the property to be producing at least 6%. Well, very hard to find these if it's going to be steady income, but it does work, and in today's market it's very aggressive. You can buy properties and take them to their higher and better use, like we do. We take them empty and we put tenants in, they increase in value, and that's how we actually make money. Or we take properties, rehab them, and sell them for more money, because your cash flow could be just on remodeling a property or rehabbing it and then selling it for more. So you want to figure out, is my money safe in this property? How much money will I invest as a total investment? How long is it going to take me to sell it? What are the selling expenses, etc.? And now you have an opportunity, you have to repeat it. The problem with buying and selling is you have to keep repeating the process. It's like hunting, finding, killing, and then cooking and eating. That's just too many steps. Although it does work on both the very low end and the very high end. Kind of mid-range can get a bit tough because if there is a hiccup in the market, you can get caught with properties you cannot resell or you cannot get out of profitably. So safety is number one. Number two, look for cash flow. That's why I prefer commercial real estate. Number three, I look for liquidity. Can I borrow against it? Can I get a credit line against it? Can I sell it fast if I need to? Can I actually create some liquidity with the cash flow by, if I can't sell it, if the goal was to sell it and I can't sell it, can I rent it? So my liquidity is very important. I want something desirable for the banks to loan against, or for actual tenants or other people to come in and partner up, etc. So I want some liquidity in the assets that I acquire. And number four, I look for cash reserves. Cash reserves will save you from a lot of problems. Cash reserves is money on the side that you have equal to 6 months of you sustaining with that property, either making some expenses, continuing the rehab, continuing the payments, etc. Cash reserves is what will save you from a lot of problems. A lot of people invest every penny they have plus credit lines, etc. So they never leave cash reserves. God forbid they get sick, the market turns against them, or the bank calls the loan, or the loan becomes due and they don't want to renew it. Next thing you know, they become the motivated sellers. So cash reserves is so important. And also on a positive side, if you have cash reserves, and when you have cash reserves, there are opportunities, you can jump on them and get them. You can create opportunities with cash. When you have more cash, you can go and make cash offers. So cash reserves are very important. So I repeat, safety is number one, cash flow number two, liquidity number three, and cash reserves number four. You look, for example, how I set up my own real estate funds. Number one thing, like SFI fund, you can go to sfifund.com, which is securedfixedincomefund.com. The way people invest with me, they can invest as little as $25,000, as much as millions of dollars. We have unlimited opportunity to raise capital because it's a Reg D 506C. And I can talk more about the regulations with the SEC allowing us to raise capital. But what's important is when people invest $25,000 or $250,000 or $2.5 million, their money is cross-collateralized against all the assets in the fund, not against just one property. So the safety factor is a lot higher. There is no such thing as guaranteed returns. There is no such thing as no risk All these, if anybody tells you that, they're actually not in compliance with SEC rules. They're not actually being very transparent about how they do business, because even the government can't actually guarantee you anything. So the key thing is safety. We reduce your risk by taking your money and giving you a promissory note against all the assets of the fund. Number two, we provide cash flow, provide a steady return of 6 to 8%. People put 25,000 to 249,000, they get 6% per year return. They put more than 250,000, they get 8% plus. You can even reinvest that money and have it compound. I have people that have been with me 8-9 years, and they actually doubled their actual cash. People put $250,000 and now they have over $500,000 because my fund has been in business for 11 years straight. We're a revolving fund and we're open all the way to 2033, and we have the right to actually renew and continue to grow. So safety factor, we provide the cash flow for the investor, we provide liquidity. People that want to cash out, they're not stuck for 3, 5, or 7 years like other funds. They can cash out with a 12 months notice, a simple email saying, I'd like to cash out all or part of the money I have with you. This is huge, this is very important, because I am deploying the capital, I'm providing them a lot more safety, I'm providing them steady cash flow with no hassle, and I'm actually giving them liquidity. And most people get cashed out in less than 6 months. We've cashed out people in less than 90 days. But our private placement memorandum, the way the investors come in, we tell them within 12 months you will be cashed out, partially or in full. Even if you're IRA money or 401k, etc., we cash you out as you want. In full, your principal is always intact. Cash reserves, we always keep extra money cash reserves. Yes, it costs me money as the fund manager. I have my own money in the fund, they have family money in the fund, but cash reserves is important, and it varies based on the projects we have and what we have coming up in the market, what's sold, etc. But these are the 4 factors that I follow. This is what I offer my investors, and this is how we continue to grow. Thank you so much for listening to me. Until the next video.
Jump into commercial real estate discussion like these people. Apply for CRE Mastermind. Click the link in description.